The bull thesis is still intact. He's right here at Post 9 to make the case. John Spallanzani, the Miller family office. Good to see you. Welcome back.
Thanks.
There's a lot of uncertainty in the market suddenly. Tell me why the bull thesis is still good.
Yeah, I think that the market was a little overbought, obviously, as we got into August, and we see this correction that was not kind of foreshadowed. It's never one thing. I think we had the Fitch downgrade. Obviously, we have Jackson Hole coming up. We had some
backup in rates.
Well, backup in rates, yeah. I think that's kind of almost run its course, just because if you look at the yield curves around the world, right, we have bonds at 2.6%. We have Switzerland 1%, you have Portugal 3.9%. So, and then you have Japan. Everybody said people were going to sell treasuries. Same thing with China. But why would they do that when their currencies are weakening? So, if anything, if your currency is being devalued, you want to get the money out of the country and probably into treasuries, not out of treasuries. So I think there's an underlying bid for treasuries over 4%, obviously. I think the Fed continues to talk tough, but they'll pivot on a dime once they see employment or any other indicators kind of go in the opposite direction.
There are some who are trying to make, if we're talking about the bullish thesis, that what was the thesis, this, soft landing or no landing, has suddenly turned into a bearish thesis that no landing is no good anymore because it's going to keep rates elevated for longer. And just who knows what the Fed's going to do. But at the very least, you're going to keep rates at these elevated levels, and that's going to put a cap on valuations and stocks.
I think people forget how bad 2022 was. It was one of the worst years for bonds, equities, and just about every other asset class since the 1930s. So we have this recency bias where everything was really bad last year, and now we're just kind of coming out of it a little bit. And I'm with Laszlo Barini, who says, the bull market in NASDAQ started probably around the time that SVB and we had the regional banking crisis. And then the actual bull market, we're going to take 20% from the low for the S&P, probably started in June. So this is a little bit of a correction. If we look out, we have student loans coming due. We have China blowing up. We have gas prices back over. I paid $4.50 today for a gallon of gas. So we have all these drags going into an election year. Powell already made the transitory mistake where he said inflation was transitory. Is he going to want to make another mistake and have a major recession on his hands going in? So, again, I hear people talking about, well, the market's pricing 5 rate cuts for next year and all these ridiculous assumptions. But the fact of the matter is, when you hike rates, you hike at 25-point increments, right? 25 basis points. When you cut, they could cut 50 and 50. That's 100 basis points real quick. So do we consider that 4 cuts, or is that 2 cuts? So we get into these semantics, and I think that right now everything's rosy, but the Fed is doing quantitative tightening. The market yields have backed up. We have mortgage resets coming, which are going to be big. We have student loan debt. So there's a lot of unknowns that he's kind of treading into this fall. And those are the reasons why I think that the market's going to continue to do well, because they're not going to be able to stay this tight.
But even, seasonality is not great. You mentioned some of the other risks. We didn't really mention China, which
China's
looks kind of ugly. In terms of where growth was projected to be at this point coming out of the pandemic, where is it, right?
That's disinflationary, along with the AI story is also disinflationary. So we saw UPS and UAW, 2 unions, had very big contracts, and that kind of scared a lot of people. But remember, most of the workers in the United States are not union workers. They're going to be fired, God forbid, if there's a downturn in the economy. And that's the last thing Jay Powell wants. We already have unemployment tipping up a little bit, claims almost at 250. The last non-farm payroll was, pretty much in line, but almost in that 100,000, under 100,000. If they start seeing non-farm payroll employment print under 100,000, they're going to be in the easing camp pretty quick.
Do you need mega cap tech to stop going down, to stabilize, or do you say it doesn't matter as much because there's something else to pick up the slack? How do you view that? Because it's undeniably one of the reasons why we're even having this conversation, why the S&P is down 5.5% this month,
and the Nasdaq's down 6-7%. Tesla's down 22%. That's a big move in 1 month, right?
Well,
so,
Apple's down 11.5, right? These stocks matter a lot. They matter on the way up.
Yeah.
They sure as heck matter on the way down.
Yep. Well, we have, the last 13 Fs, we had Dan Loeb pile into AI-related stocks. David Tepper went all in as well. So I think that that's a longer-term story that's going to play out, not just till the end of the year. That's going to play out over the next 5 years, 10 years, and that's a major story that I don't think is getting a lot of credit. But those stocks obviously were kind of everybody piled in at once. They've come off, and I think that towards the end of the year, we're going to end higher than we are right now. And I think even at the end of the month of August, we should end higher than where we are right now.
Oh, we'll make that the last word. John Spallanzani, thank you.
Thank you.
It's good to see you. All right.